And what is up, everybody? Wow, that was crazy. Um, anyways, we were in a awesome trade, and I was trying to uh, basically figure out where to go next with this Bitcoin trade because we caught the bulk of it, and so I was trying to bring people aware of what we had gotten to at this point, and then try to figure out what we were going to do at this point to see what we could do to capitalize on this. So. What I want to do now is transfer over to the chart, the Bitcoin chart. I'm on the 15-minute. Like I said, I think I was at, what was it, 48. I think it was like 4803 was where my entrance was. But then again, I was adding so much because it was going up so quick. So I was adding more and more to my leverage. That I ended up making a pretty penny. But the thing was that it got inside of the the breaker, the could be bullish breaker, could be bearish breaker, depending. What I think is going to happen is, okay, so how do we know what a breaker is? Breaker was the last down up move right here. Actually, this isn't it at all, but it's in a different one of these. I know I made it. Yeah, it's in this one. Okay, here we go. So give me one second. I'll show you where we're at. And so we got to see right now we are in the middle of a fair value gap and a breaker. Look at that, right into the middle of it. That's where I was expecting it to go. I expected to get down to this bottom part of this, and then I was going to put in more on my part, and but I'm not for sure if that's the smart move. I think we might start seeing it slide down again. All right. But let me move over this way and shut up. It says error, YouTube is not receiving enough video to maintain smooth streaming. I'm doing exactly what YouTube asks me to do every time. Okay, so anyways, if you can see this, there is this yellow outline right over here on the left hand side of your, you know what, let me get myself off of here. That could possibly have something to do with it as well. All right, so over here on the left hand side, I'm going to put this on the hour. And now that you see on the left-hand side, right here, this yellow, right? So what this yellow is, this last down move is your breaker, right? So what do I mean by breaker? I mean you have up here, you have a down move, right? And then an up move. And this up move is higher than this down move, right? So therefore, if this breaks below here, then this is going to be considered bearish. But if this, which it just came up inside of the breaker, if it gets above it, then this will act as support. And then since it acts as support, then it will go on up, and we should see that continue to go on. So right now we're kind of in a predicament because it's right in the middle of both. So we don't know if it's going to go up. We don't know if it's going to go down. So that is my predicament right now. Considering this is the, see, here's the down move right here. That is your breaker, right? Let me pull this together. If you watch my videos from earlier this week, I talked about how and why Bitcoin made its big fall from up here, right? And I actually have it marked out right here, right? And it's because it hits, right? This part right here is a bearish order block on the weekly chart, right? So considering it hits that on the weekly, and it just drop, and not only that, there's a daily fair value gap. In the middle of the daily fair value gap is the weekly bearish order block, which also is another reason why it would pull it down. And then also another reason why it would pull it down is because you have a monthly fair value gap down at the bottom here, which is where this green box coming from, right? So all three of those things put together was the reason why it came up. Boom. You know, weekly order block, halfway to the daily fair value gap, boom, it drops it down to the monthly fair value gap. But look, boom, it automatically kicks it right back up. Not only that, it also hits a weekly fair value gap, right? So hits the monthly, goes down to the monthly, hits the weekly, boom, jumps up, and then it hangs around the top of that monthly fair value gap. All right, that was all last week. And then it still did the same thing, dropped a little bit, and then it wasn't but earlier, a couple days ago, it finally pulled up and out of the monthly fair value gap. And whenever it pulled out of the monthly fair value gap, it got inside of the not the bearish order block, but the it could have been the bearish or bullish. I want to say order block, but I know it's not right. I keep forgetting the word. It's not mitigation. It is. I'll think of the word just in a second. I should have them labeled, to be honest. And if I just double click this, I should be able to hit text and it should be labeled, but it's not. And breaker, there we go. Okay, so there's your breaker, right? So, and here is your breaker over here. We're just taking a look at it at two different angles. That's basically what we're doing. So, all right, so this one's on the 15-minute. So it pulls up and see that this is the big drop here, right? And I told you, if you watched my video earlier, maybe yesterday, the day before, I showed you why it dropped, whatnot. So now it's pulling up into the breaker, right? So since it's pulling up into the breaker, the question is it going to continue going up? Because if it goes up and it gets on top of this breaker, then what's going to happen is that this is going to act as support, right? And the way I have, and the way you should also think about looking at Fibonacci's is institutional, and basically your institutional numbers, meaning that wherever I put this Fibonacci at, right, put it close to institutional numbers. Institutional numbers meaning 100 numbers, your 0-hundreds, your 200s, your 500s, your 800s, and that's it. I mean, they can be all flat numbers too, but if you put this one right here where this monthly fair value gap starts, it is very, very close to the 41,200 mark. So I placed it there. Where it ends is very, very close to the 4,700 mark. So I just left it there at the 4,700 mark. It moves up. It comes close to the 127% extension. Now, those are your extensions you need to make sure that you have placed on all your Fibonacci's. 127, or any kind of 27, any kind of 50, any kind of 62. Those are your 3 extensions that you're going to see these all reach for, depending on what kind of outlay, I guess you could say, we're going to have ahead of time. Use your use your slow times to take a look at these, and then you can start actually building on those to see how many standard deviations it might be before it gets to this point. Is it actually going to be 127%, or is it going to be 150%? And the way you can do that is just by checking out your regular standard deviations. Now, with this one, you have, especially whenever it whiplashes, this one right here, whiplashed on the 13th of September, right? Whiplashed to almost 4,700, all right, down to the 62%, or 61.8, either or, right? So what you can do is you can take that, and then you can measure that the opposite way, and that should give you an idea of how far it could extend. I'm not saying it will 100%. I'm just saying that is a good tool to live by, to be 100% honest. I don't know how many times I've done these standard deviations, and I've come really, really close each time. If not, I'll just set what I have, maybe just for a couple bucks, or maybe a couple, if it's Bitcoin, a couple $100 underneath it, and boom. Okay, so there is that standard deviation. All right, so I'm going to do a copy and paste. And let's see where that takes us. It takes us almost to the 162. It does. if I would have to get in really, really tight in here, okay, we will see how close we can get. So it pretty much gets down to the 50,400. So that could be an area where to expect the next run to go to. It could be. It could be. Now, I'm not saying it's going to. I'm saying that could be one of the areas to expect. Now, what you could also expect is that since this did get above the 127, right, it looks like oops. All right, as you can see, one of the reasons why I actually wanted to go long here was because of all of these. Well, for 1, 2, 3, we had 3 basically equal highs, right? So to me, and right next to the 127. So this was telling me that a lot of people would see this as resistance. Right, so whenever I get close to here, a lot of people would start putting in their sell limits, or they would put in their buy limits, expecting it to, bounce off, take off, and then maybe come back and then catch this as a like a bounce back, or what's the word I'm looking for? Well, either way, what people would be looking for in this instance would either to sell just before getting to this area and then sell off, or they would expect it to take off, come back, retest, and then they would try to catch a breakout. To me, it was neither, right? But it was going to try to get above that. So instead, what I expected it to do is exactly what it did. All right, it broke the highs, all 3 of those, but instead of coming back and selling off, and instead of actually coming back and testing and taking off, what it do is sat there in the middle. So it made people chase it. It made people chase it on both sides, right? So instead, what I did is I loaded up on as long as I could, and I waited as long as I could until I realized, okay, this thing isn't going to move much anymore, and then I basically let go of all of it until the very little I could. So I took a pretty hefty win on that, to be honest. I can't say everything I did, but I'll just say it was a pretty good win for me. So now the question is, what's going to happen next? Well, right now is that it's inside of the breaker, right? So it's inside of the bearish or bullish breaker, depending on how you look at it. So this one doesn't really show. This one down here is the, let me see here. Okay, I like this one the best, to be honest. Okay, so because this is the monthly fair value gap. All right, so it just broken out of that, which is what we were looking at here, right? Which is where this green area is. That was the monthly fair value gap, right? So right now we're looking at the daily, right? So it pulls up just above, right where I was talking about, right? And since it breaks both of these red candles, this makes it bullish. This does make it bullish. Now, that doesn't mean that it doesn't have the ability to pull back a little bit more. What it can do, right, it can pull back, and it can pull back almost always down, even as low as here. And to be honest, it could pull all the way back down to here. I don't think it will, but we could see that, and we could see it take off like that. I don't think we will see that, to be honest. What I do think we will see, I think we will see probably try to sneak its way down to, sneak its way, oh, come on. Sneak its way down to there, right? Maybe even a little bit lower. And then, geez. Before finally moving up and trying to move up and away. Because we still have all of this, right? We still have all of this huge fair value gap that has to be taken care of. It doesn't have to be taken care of right away. And that's the thing I don't want people to get confused about or think that we have to get into, like that this thing has to skyrocket right through this. No, don't think that, because then you're going to get in trouble and you're going to make some dumb decisions that you don't want to make. Instead, what you want to do is that right there. That is actually a bearish order block. That's like the same thing that you see right above here, what caused the big drop. Okay, so keep that in mind. Okay, the only thing is that since this is the daily, what made this drop right here was the weekly, and then the daily, halfway through the daily, was the weekly bearish order block. All right, so I think what we'll see, if we don't see this push all the way up, again, we could see it pull back just a little bit and continue on upwards, right? Before we continue to see it move on. And once we get above, up and above, right, this rectangle here, this fair value gap, and it gets on top of here, that's going to act as support, right? So be careful with that. So just make sure you understand that that can act as support once we get up and above that. Now, what it could also do is get close to it, wick through it a couple times, right? Because of this guy right here, and then boom, reject back off. All right, if it does that, expect it to get down to the bottom of this, or maybe even halfway. I'm not 100% sure, but expect it to drop one way or the other if it doesn't actually close above this rectangle, right? And then it could drop down before it finally does pick up and take off. Now, the worst case scenario, what could happen is that let's say it does neither, right? Let's say instead of it taking up and taking off, what we see it do is, I will give this the hour. See, and this is what I want to see it do. I want to see it get at least about halfway through, right, before we see a little bit of a pullback. And then after we see that little bit of a pullback, you see these, you can already see the red candles it's forming. All right, those will act as bullish order blocks. It'll hit those and then move on up, right? So, and it depends on the velocity that it hits them as well. So it could start dropping really quick, and if it does start dropping really quick, it's going to try to make people sell it really quick. And if it tries to make people sell it really quick, expect it to hit those 3 red or however many red candles that we have, and then boom, bounce off like a basketball. That's what I would expect. Right? So just because it's falling really fast, don't chase it. That's the last thing you want to do. You don't want to chase this, because this could be a really good money-making opportunity, to be honest. Okay? I'm going to try to make a little bit more out of this by adding in some more fair value gaps, just to try to show you, because it's because of the way it took off, it's going to have a tough time trying to get below where it's at. I don't expect it to, I mean, it could get as low as, all right, 100%. Lowest I think it'll get right here. Cancel. This is the lowest I think it'll get. And that was 47,282. All right. So I think, to be honest, I think that's probably the lowest we're probably going to see it get. Mainly because whenever we did see So again, because of the Fibonacci's here that are coming, that are basically enclosing the monthly fair value gap, right? I have them on the institutional levels, the 41,200, 4,700, right? And because of that, I don't think it's going to get below the 4,700. All right, so the next best level before that is going to be your bullish order block, which is going to be your last red candle, right, before, and I'm on the hourly. So it's going to be your last red candle right here, dipping down into the green box, your monthly fair value gap, before pushing back out. The top of that the top of that body, I think, is going to be the lowest that we're going to see for now, which is 47,283 basically. 47,280, or 47, hold on. Yeah, 47,280. Let's call that 47,280 to be safe. All right. What could happen with, I mean, as you can see, it's already pulled down below the 127%. What I think, to be honest, is that it's going to get down to the bottom of this line right here, this 47,3691 line, or 47,639. So let's go 47,650 or 640, 47,640. All right, be the top of this candle here. All right. This candle right here. Actually, I want to get rid of these guys right here. These are just fair value gaps. It could go through those fair value gaps. If it does go through both of those fair value gaps, this is what I would watch for, right? Why? Because this is your last up candle before the next down candle. So you have a down, up, and then you have a lower down before it finally picks up and crosses this entire candle, right? And so whenever the price returns back to that candle, that's when you would expect it to see it turn bullish again. So you could see it go through these fair value gaps and then see it turn bullish again, right? So, and the same thing goes for it actually getting up and out of these this big drop here, right? If it makes it up and out of this big fair value gap and it's over the top of this 162, then expect that to be the support, right? Just as you could expect this down here to be the support. It just depends on where it's going to go first, okay? Personally, I think this thing is slowly going to maneuver its way down through here and then back up, right? And then get to the 162. Now, when it gets to the 162, this is where we got to be careful, because this is where it could get rejected, right? It could get rejected. It could get rejected farther before that too, right here, right at 50282. It could get rejected right there as well. The reason it could get rejected right there is because that is your last up candle, right? Before moving sideways and then going up again. So, I mean, it's a long shot that it could be this candle, but it could be this candle because it's still inside of the fair value gap. So a lot of things can happen inside of this fair value gap, right? So, or it could get to the top of this fair value gap, and then that's when it gets rejected, right? So watch out for those things. Watch out for those two things. That's what I would be watching out the most for. But right now, I personally wouldn't have any problem putting on some kind of I'm not going to say it because I cannot give financial advice, but I would feel comfortable going long, just maybe for a couple $1,000 and then pulling back out after that. So that's what I got to say about the Bitcoin right now after that awesome